All right, everybody. Hey, how's it going? So you guys are all here for Reunion's Wealth Building Boot Camp, primarily focusing on how Reunion does its thing and sort of on top of that, how our investors make their money doing so. So welcome. I really appreciate y'all being here. If other people are going to be coming in, then by all means, I do ask that everybody mute yourselves and maybe turn your video off. I don't know if that's helpful for any of you. And other than that, we'll get started. So, hello, I'm Solomon Floyd. I'm the owner of Reunion Investments. We are an economic development firm that focuses in military and tertiary markets around America. We house military members, we house civilians, we create opportunity for investors to get in on some of our government contracts with our local municipalities and our government federal agencies as well. So that's essentially it. The other thing that I will say here is there's a little chat feature up at the very top of your screen. If you have any questions, feel free to go there and get the chat going and rolling. So you guys can ask questions, communicate with each other. This is also going to serve as a form of networking as well, because we all kind of miss that. No one's going out and meeting new people at the moment. So without further ado, we're going to get started. Today's big topic here will primarily focus on 401ks. And we're going to kind of use things how we would in the sense of opportunity. The way that Reunion works is we provide opportunities for investors, whether it be on a very small scale or a very large scale. So what we try to focus on is finding an area, providing the value in that area. And we're going to go over a few different ways of how we make that happen right now. And what the IRAs will allow you to do is be a part of how we invest. And so we do have a sponsor and partner with us who's going to be here today, maybe to give some more information on IRAs. If they don't show up, then I will direct you all to their website. But here we go. Let's go ahead and get her started. Let me share my screen. So with Reunion Investments, we primarily focus on a few of the bigger things in life, right? And that's primarily providing value for our investors. But in a sense, we have a responsibility to provide value to the markets that we ultimately host in. So, to provide value to both investors and the communities we work in, we've created a short-term joint venture real estate program. And what this is, for those of you who don't know, are short-term meaning for the next 6 months to the next 3 years is what that means for real estate investors who are looking for something that's short term, something that allows them to enter in the real estate market either as a flip or a short term buy and hold and be able to sell that to other investors or an end buyer, usually a civilian or military member with Reunion's case. The other big things that we focus on here are is the term joint venture. A joint venture basically insinuates that it's multiple individuals or LLCs working together to accomplish a single goal of getting more real estate. So what that truly means is we offer this up for up to 10 investors, and we basically split the amounts that we need for those 10 investors depending on how many slots we have per program. This particular program focuses on providing military housing for members of Wichita Falls and Shepherd Air Force Base. And what that really allows us to open up to is we've got this huge group of personnel that do not have adequate housing, and we can supply that to them very easily by just simply providing the better house, whether that's through a rehab or whether that's a new build. And so the reason why we've done this and created this for our investors primarily becomes a matter of, again, we provide value where we can in the best possible way. So the reason why Reunion would be the best fit for something like this, we have a proven track record of success for our investors. So far, we've achieved anywhere from 35 to 40% cash on cash return for the many investors that work with us, which on average is a really good idea. It's really ideal for investors at the moment. So for those of you who are wholesalers, for those of you who are looking to bring others into your own individual programs, it's something you may want to look at. We are leading experts in military and tertiary markets. I myself am a military veteran. My team is full of financial banking individuals, investment banking individuals, investment planning and investment strategy individuals. So we 100% know exactly what we're doing when it comes to making these markets hum and perform the way we need to. So the biggest thing that you can also find with Reunion is real estate investing made easy. Market analytics and consulting is something that we pride ourselves on to make sure that we have all the information necessary to make the right decisions for your portfolios. Property identification and our in-house contracting teams, again, make this easier for individuals who are looking to invest with us. And we have our property management staff as well. So essentially, the benefits of a market like some of these other markets that we're seeing that you're going to want to use your 401k for are going to be these great things. So I'm going to start off with the elephant in the room. A 401k or an IRA is a vehicle in which you can put money into for retirement, and it grows tax free. And tax free is great. So imagine you get to put away $20 a day, and you don't have to pay taxes on it. That money really accumulates over time and allows you to do great things like invest in the stock market or buy your dream house or send your grandkids to college. It allows you to do everything that you would want to do in your retirement. Many companies have 401ks and IRAs that they will either match or at least just provide you. And those are always great. So, with the IRAs and the 401ks, this is the opportunity that a lot of people have. I want to get invested now, and they can't. And the reason they can't is because while your IRA is with your current employer, you cannot choose where that investment money goes. You are at the whim of the fund manager and the individual who is managing your money. And what a lot of people don't know is that these larger companies, Fidelity, and what was the other one? E-Trade, a lot of these other big companies that are managing a lot of these portfolios of IRA money and 401k money charge lots of fees. So while you may be making a lot of money on paper, the moment you remove that money from that account, you get charged a lot of fees coming out the door. So when you would have made 450,000, now you're probably sitting at somewhere close to 375,000, and that is a big chunk of money gone. And so what we're going to learn today is one, if you have left your job already, or you've left a company that has a 401k, or you rolled it over, what these next steps are going to be for getting them to where you need to be. Right now, we're going to start with the opportunity itself, which is the market. The market is Wichita County, which is Shepherd Air Force Base. It is where I spend a lot of time serving and operating from, and it's where I have a lot of my rentals themselves. So essentially, Shepherd Air Force Base is the largest flight training installation in all the United States military. It provides training for not only the pilots of the United States, but also pilots for NATO as well. So on any given day, there are about 10 to 15,000 NATO pilots training at that base. And then on top of that, it also serves as the tech school training for enlisted individuals to learn aircraft maintenance, loading bombs, engineering. It serves as a hub for a lot of people to learn. So what a lot of people don't understand about military bases is that the training bases are the ideal bases. The reason being is because the population itself is captive. When you are in training, you are not a deployable member. On average, Shepherd pilots stay on that base for 2.5 years, not being able to deploy. 2.5 years is a long time of you getting steady rental income and having that individual as an economic driver. On average, our enlisted individuals stay there for about 9 months to a year. So 9 months to a year means that, again, right, for the majority of each season, you've got somebody there who is going to be needing something. They're going to need a barber shop. They're going to need a place to go get some food. They're going to need a bar. They're going to need housing. So it's all about identifying the market itself and saying, why this place? So we chose Wichita Falls because they weren't able to have some of the things that we hold near and dear in our larger cities like Dallas, Texas. Wichita Falls itself is a very small city, but it does have a lot of potential. The issue with it is that it has a lot of distressed properties. And that is a key thing for us because the more distressed properties means the more opportunity. There's a lot of cheap distressed properties, which is another aspect to the opportunity piece. The things that it doesn't have are the skilled labor force to fix up those homes. It doesn't have the buyer personnel to buy and fix up those homes. It's either one or the other. And it doesn't have a large number of people who can go out and build new homes. So it means there's a lot of logistics you have to plan out to bring your investments, to bring your plans and your developments to this area. With our union, we have all of that set up when you invest. So you'll see in the opportunity that we have, everything is there. But what we look for in a market like Wichita Falls is the lack of updated commercial buildings. We look for, what the minimum wage is going to be. We look for, the small businesses that cater to the individuals who are there. And that's really going to be the military base and the university. Wichita Falls also has Midwestern State University, which I believe is anywhere from, I want to say, 5 to 7,000 students there, who participate in the economy primarily through, their student cards and, working in the actual city centers as well. So this makes it a little bit easier for identifying a market for us, as there is a opportunity to get a more educated workforce. There is an opportunity to bring in more people to spend more money in this community. So as you can see here, when we go down, the base itself, direct deployment, refers to direct deployment of civilians, the amount of people employed from the community at this base, which is 9,000 individuals. We have a disposable income that the base is essentially allocated. So I'm sorry about that. So the way that a military base functions is everything's on a budget. If you haven't seen the DoD budget, it's quite large. I think it's like $700 trillion. And it's not going to go down anytime soon. So essentially, each base is allocated a certain amount for disposable income that goes towards things like housing, like food, like having a drink at a bar, things that you can dispose of very easily. That's the amount of disposable income. And a lot of people do not capture this. A lot of the businesses in Wichita Falls do not capture this. A lot of investors have not known this and have not decided to capture this. And this is as 2017. This number has gone up a little bit more than that since then. So that's good to know, is that there's more output, there's more money to be spent at this military installation. The output necessarily refers to how much the installation itself spends in the local area. So the base is spending damn near $4 million in Wichita Falls. Sorry, 4 billion with a B. So it's spending $4 billion. But again, if you drive through the city, if you see the businesses that are there, if you see the housing that's there, you got to be asking yourself, what is it really being spent on? For the most part, it's being spent on hiring people and keeping them at a very minimum wage position. So it's a lot of people that get employed by this military installation, but they're not really getting employed for anything of true skill or value. They're being employed to be bodies that serve food, bodies that clean up the streets, that clean up dorms, that do very simple handiwork. And it provides a living, but it doesn't provide the best living. So the total employment of Shepherd Air Force Base is about 24,000. 26,000, 24,026. And basically, again, it comes down to direct and indirect deployment. So that's going to be, again, the people who work at that facility and the contractors who work at that base as well. So that's where all that's coming from. All this to say, that's 24,026 people that are going to need better housing, that don't already have it, that have to rent, that are going to need something from you. So how our union identifies these opportunities is coming in here saying, hey, these are all these people that are going to need something from us. Let's go ahead and build it. Our biggest thing that we do is we build a questionnaire and we ship it out to everybody that we can possibly get our hands on and ask them, what do you want? What do you need? They tell us, we provide it. It's that simple. Moving on to Wichita County itself, we have a lot more, right? So again, this is all stuff that you can actually find on their website, which is developwichitafalls.org, I believe. It may be something different, but I would look into Wichita Falls development, and you will find this information on there. It provides everything that you would need, right? It shows you the top employers of each base. Again, I didn't create this, so these numbers may be a little off from what we just saw, but it is what it is. So essentially, this is the comparison from living in a big city to coming to a smaller city. So its nearest comparison is Dallas, Texas. So it's about 2.5 hours away. I think it's the closest big city, if you're not really counting Fort Worth. It tells us exactly how much the cost of things are going to be. Now, for every person on this call, this is going to help you identify something very key, right? It's going to tell you that if I put a grocery store, I know that if I can get 14.72% less on groceries, I can charge it somewhere else. Or I can take that discount and use it to provide value to whatever grocery stores I work with. Same thing for housing. If housing is going to cost 37.96% less money than a house in Dallas, that means that your investors are going to be able to buy homes and see their returns a lot quicker from certain individuals than they would anywhere else. Utilities costs are lower, transportation cost is lower, healthcare cost is lower. So if everything is substantially lower, that means that this is a market for you to come inside of. You don't need to go and buy up everything and raise the prices through the roof. Just take part in what's there, which means everyone in this little market will have money to spend. But if they can't spend it at a place, you need to bring the place there, which is why we do what we do. So our goal is to provide and bring what is not there to the people who need it the most. And a lot of you may not know this either, but military bases are the kind of places where people usually do not have mass layoffs. For the most part, as long as I've known, the military has never not been paid, which means they're always going to have money to pay for rent, which means they're always going to have money to pay for their groceries, which means they're always going to have enough money to pay for their gas. Because keeping our military in the best financial shape is what keeps our country alive. All right. So the scale development, when we find an area and we say, all right, cool, we know where we're going to go, we know why we're going to go there. We build up our factors, and now it's all about the process of elimination. Where do we start that makes the most sense? In this case, we've chosen Burke Burnett, Texas, in their downtown redevelopment, primarily because one, they've invited us to come and participate in helping their community grow. Two, it has the best school districts in this area, and that was a primary question that we asked every single military member, every single civilian, right? Which school is the best one? We figured out that Burke Burnett has the best school. 2 years ago, the Wichita County school department basically said, hey, we're going to end school choice. School choice for many of us means that if I don't live in one area, I can send my kid to school in another area. You can no longer do that in Wichita County, which means there is a huge need to fill. Right now, there are 250 families waiting on housing, waiting on their opportunity to move back into Burke Burnett so they can send their kids to school there. That's 250 people. So what does that mean for us? We know what our need is. We know what we need to fill. This is where we've started. So this development goes over exactly the very similar thing, which is 69 total single-family homes, 185 multifamily homes, and 16 commercial units, right? We have a brewery, we have a CBD farm, we've got a lot of multifamily units, a lot of single-family units, and a brand new downtown coming in, something that'll cost us about $30 million to get everything going. The reason we've chosen this area is because we can provide value here, right? If we provide people jobs and the opportunity to have jobs at this brewery, now they can afford to live over here. If people can make a great living at the CBD farm, they can afford to live over here. If they can work in any of these commercial spots, they can afford to live over here. If you're a military member, in this case, you can afford to live over here regardless because this is catered to them and how they get paid. And they get paid to live in some of the most boring places on earth. So all you need to do is find where those boring places are, develop a plan, and make them less boring. Coming down to the economics of how all this works is very simple. This is where the 401ks come in. So in general, for those of you who are younger, you're not going to have that much in your 401k. But here's the best part. You can partner your 401k with somebody else. Let's say you find a market and you find an idea, you have it in the back of your head of what you're going to do, and you only have maybe 20% of the total project cost. You can go raise funds from other people's IRAs with your own. You can partner those IRAs to make sure that you have the most value in whatever you're doing, which adds a whole nother level of one, fundraising, and two, being able to get your projects done and change the lives of others. So, for example, this is 12 residential units. The number of investors is 2. Our purchase price in total, $1,750,000, and we had to finance another $1.5 million to be able to get where we needed to be for what we needed. So we came up with the down payment. Now, the down payment itself can be brought up a few different ways. You can do it with an IRA. It's very tricky. A lot of lenders are not really cool with getting loans on IRAs because they can't take your IRA. They can't collateralize it. They can't go after it. If you don't get the project done and you start missing payments, they can't go after your IRA, which is another big plus. It's a huge one. Huge, gigantic. So what we did was we raised the money primarily from what we needed, which was we took all the IRA money that I could raise to form our down payment. We went to another IRA member who had the majority of the amount in their accounts, and we got our loan from them. So with your IRA, you can loan people money out of it. Because at the end of the day, life's good. Now, if they're going to take money from an IRA to another IRA, that's kind of difficult. At the end of the day, an IRA is a non-taxable item, and it is a non-collateralizable item as well. Collateralizable, non-collateralized debt asset. There we go. Done. So total cash needed for everything else, but at the end of the day, the numbers with Reunion look very similar to this most of the time. About 106% ROI on the profit of this entire thing, which again isn't terrible, especially for what we needed for our down payment to come back and get where we needed to be. So we were, and basically another whole $100,000 over where we needed to be to get the numbers that we get. Now, this was all done to provide housing for military members, and in doing so, we have our rental income coming in every single month because they're military. We're never going to miss out on those payments. A lot of us need to understand this other thing too. The military is like oxygen in a room. When one member leaves on a deployment, that means somebody else is coming back. It may not be, the next week. It may not be the next 2 weeks, but it'll be within a month time frame. So you'll make sure that you'll always have somebody coming in because people are going to be coming back and forth. The military always has to keep its positions filled as best as possible, and it'll make sure it does that by just taking people from point A to point B. This is a featured opportunity that we're currently working on. So again, primarily seeking people with IRAs to be able to take this down or any other ways. But if we wanted to use it, hypothetically speaking, for your IRA, the minimum investment for this, and I don't even know if it's on here, it's actually on the few other slides, but I believe it's $400,000. We'll say that, hypothetically speaking, right? This is what we need for our total. So let's say we do that divided by 10. Pulling out my calculator. 425,337 divided by 10. So it's $42,533. An investor. With this, that's all you would need. So I can take 10 investors, partner their IRAs together, and go and take this project down. I can leverage it, which means get a loan from a lender, from either another IRA or a lender who's comfortable receiving money from IRAs. Those are the options. If I really needed to, I'd be able to take the entirety of the amount that I need and raise it amongst the IRAs. One would just probably take longer than the other. So essentially breaking down the numbers, right? The cost that we're going to be financing this for is $902,320. And the down payment that we're going to really be needing for all of this is only about $386,000. So when we look at that, the purchase price itself is a reflection of the cost of finance plus our down payment. We're going to be building these new homes, these 9 residential homes at 1,500 square foot a piece. So we build them at $100 a square foot. What does that mean? They're $150,000 a home. So that's 9 times 150,000 gets us where we need to be. We also have to repay our loan at the end of the day because we are taking a loan out on this. But when we build these, we have options, right? And this is all up to how you guys go about doing it with your IRA partners, or if you're going to be doing it yourselves out of your IRAs. You've got 9 total units. That's 3, 3, and 3. So you can take 3 units, sell them. You can take another 3 units and rent them, and the other 3 units, you can do whatever you please. But either way, there's always going to be that strategy whenever you come down to it. And as long as it fits the profile and the metrics of what we have here, you'll be looking at a pretty hefty percentage return of about $82,000. Sorry, 82%. I apologize. So that's essentially it. So that's the end of all that. But what really comes down to it is, once all this gets out of my face here, we're going to stop sharing. Boom. Coolness. So the other best part about this is I'm going to break it down a little bit easier for you all. And you're going to have to all let me know if you can see this, because it's going to be tricky on my end. Whatever. So what we have at the moment is this simple IRA structure. You going to help me out, Garrett? Much appreciated. Up, 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 up. Boom. There we go. All right. So the simple IRA structure, bring it up on that side, Garrett. There we go. So simple IRA structure, right? Your IRA then, and this is just how it all works, right? But your IRA, your 401k then, right? It's with Fidelity. You quit your job. You're like, all right, I'm moving on to the next biggest, brightest thing. I'm going to go do whatever I want to do with my investments. That money goes to a company like the IRA Club, which happens to be our partner in all this. And they do great work. In case you guys want to look them up, I'll share their information with you after this. But let's say you do three separate investments of 50,000, 50,000, and 50,000, all into reunion projects, right? Into investment one, two, and three. That money then gets returned and brought down, right? And now you got $150,000 invested at, let's call it a minimum of 40% return, all tax free, by the way. So all the money that goes back into your IRA is tax free until you take it out. With that, all of your IRA investments need to be passive, which means you can't own the LLC, you can't be a part of it. Like, it has to be as passive as possible. And that's where Reunion comes in. We make it very passive, very simple, very easy. Passive meaning hands off, you can't touch it, it's not for you until you decide to retire, right? So let's say we break that down, that's about 60K a month of a 40% return back into your IRA. $60,000, not a month, I'm sorry, $60,000 a year, I apologize. 40% back into your IRA. Now, let's say you do that for 5 years, that's $300,000 that's going back into your IRA. So if you remember, your amount goes in, after you're done investing, you're at $50,000 in your IRA. But in 5 years, you're getting 300. So now your IRA looks like 350K in a 5-year time frame. And that's really good. So the best part about the IRAs is this: you don't have to wait until you're retired to start them. You can get started on them whenever you want. You can set up one right now. You can set up one tomorrow. You can set up one next week. The IRAs are there for you. I highly suggest that a lot of you go to the IRA Club. They know what they're doing. They know what they're talking about. The guy who started it, Dennis Blitz, is like the guy. Look him up. He was actually a part of, I believe, the United States Fed or the United States Treasury, one of the two. And he essentially wrote the book on IRA investments and how to make sure that people can do them. And that's Dennis Blitz. I'll even show you his website. But Dennis, he's a great dude. He understands what he's doing. And we're going to share that. Boom. So this here is the IRA. There you go, everybody. Cool. So basically, this is the IRA Club sheet. This is their information. This is phone number, email, and everything you can do. So you can lend from it, do real estate, mobile investing, other investment ideas. So the other thing you need to realize is this: none of your investments need to be real estate related. They can be in whatever you want, as long as they meet the key target word. They must be passive. Have to be. Now, the IRA Club, when you go to them and call them and say, hey, I'm interested, what do I do? They're going to give you the process. But here's what they can't do: they cannot tell you what to put your money in. That is 100% up to you. There are millions of different things out there. And if you want to invest in something where you just don't want to be involved in it all the time, you want to be passive and you just want to make that income for your retirement, the IRA Club is going to be for you. If you want to be more hands-on, more into it, more doing it, then you'll need to either figure out a way to do that or take the money out of your IRA and invest it with more of an active sense. And that's investing it into your own personal LLC, your own personal business. That's taking it and saying, hey, I want to start my own coffee shop. I'm going to take this money and use my IRA money to do that. You can't do that. But what somebody can do is, your buddy Joe, if he's got an IRA, he's like, you know what, man? I believe in your coffee shop idea. Let's go ahead and invest in your IRA. Let's go ahead and invest in your coffee shop idea. He invests in your coffee shop idea. Coffee shop's a success. Everything's good. That's allowed, and that's okay. And so what we see a lot of people do when they come and work with us is, they may say, hey, I've got like $20,000-ish in my IRA. The best part of our Reunion is we've got a relatively large network of vendors and individuals that we can always find you more money to do your projects and partner your IRA with. So that's always a call to us or a call to the IRA Club there in Chicago, so we can make sure that that you guys are getting it is what you need. But now that that's done, I'm essentially ready to start taking some questions. If anybody's interested, you guys let me know. Going once, going twice. No one with questions. Lovely. All right, cool. Well, if this is the case, what I'm going to do is I'm going to drone on more about Reunion. So essentially, what we focus on again, right? Tertiary markets, developing and bringing more value to these markets. To us, is more the mission of the investor and the responsibility of the investor. So when you invest with Reunion, you own your properties. and we help you guide and manage them, which makes everybody's life a lot easier. So if you live in Chicago, if you live in Los Angeles, if you live in New York, and your properties are in Texas, they're in Florida, they're in Alaska, you're not going to want to fly out there to manage them every single weekend. Luckily, we've got crews that can do that and take care of that for you, which makes it extremely full service. The other part about our full service aspect is we strategize. If you have a phone call with us and you say, "Listen, I want to be here in 5 years, but I only have this much money," we're going to do our best to identify the strategies and scenarios that you win, um, and make sure that you can achieve those goals. If we can't, we'll give you the very blunt truth, which is, hey, maybe that's not enough. Maybe we should push this out to 10 years. Maybe we should push it out to five. And that's essentially the easiest way. Let's see. We got Jeremy with the question here. Do you guys only work with people who have IRAs? That is a great question. No, we don't actually. We work with just about anybody. Our minimum investment amount that we'd feel comfortable, and this is very important. I hope everybody listens to this. We would prefer that you have money saved for real estate, not investing with your savings. So should you have the ability to invest in real estate and be okay with putting that money in an investment for 3 to 5 to 6 to 10 years, however long it needs to be, that's the money you need to be okay with. It can't be your rainy day fund money. All right. So we invest with people who have all sorts of funds, who utilize all forms of financing, leverage, whatever it is. We invest with anybody who wants to work with us. Anybody else have any questions? All right, none. Well, I appreciate every single one of you guys being on here and spending this time with me today. If you have any feedback, please feel free to send us an email at reunion@hirec.com. Garrett's actually going to type that in the chat for you all. Or feel free to give us a call, 214-438-4809, extension 3. That'll go straight to Garrett, and you can ask him any questions. Garrett is our marketing director, and he knows everything about just about everything. So he can take care of everything there, guys. So if you have any questions, feel free to also go to our website, reunioninvestmentsllc.com. It'll have all the information you possibly need. It'll have links to our other events coming up, and see what happens with our YouTube coming up here, guys. So we appreciate you. Enjoy the rest of your week, and keep it going.